Hey folks, welcome back to T2SPC Trader. I hope everyone is cool. In this video, I would love to break down the price action for Friday 22nd of November. If you watch this video, I hope this concepts, which is called ICT concepts, is gonna be much more clear to you to understand the PTRs, how to use them and how to go for the trade. I will show you the logic about the entries we had today. I have done some of them around the live, and I will also talk about the PM session executions or PM sessions trade setups. Hope this is gonna be helpful for you and you will learn a lot from here. Just make sure that you have pushed the like button, and if you are new to our community, I really appreciate if you subscribe to our channel because you are learning a lot from here. The more you learn, the more you will earn from this trading. The T2 wizard is going to teach you how to trade the ICT concepts in a very logical way. However, this is the weekly candle. First, I would love to tell you about the PO3. According to ICT himself, if I look for the bearish candle, then market should open. After opening this market, it should do the manipulation. That means it will go higher. It will clear the buy side liquidity from here. Then it will expand lower, and then it will go a bit higher and it will reset over here. This is the scenario of the bearish candle. If you look for the bullish candle or bullish weekly candle, then it will open here, the manipulation will be here, then it will go higher, it will fall a bit lower, and then it will close over there. This is called PO3. Every Friday, if you see the bearish displacement before Friday, around Friday you will look for this type of little bit up run to close the market over here. This is the last candle actually, 459. This is the last candle. This market is going to close exactly over here. How do I know that? How far this market will go higher and then close over here? I'm giving you the bearish candle, you will think about the vice versa. So for the bullish candle as well, exactly on Friday you will mark the high and the low, and you will use this two line, which is 0.22 and 0.3. That means 20% and 30% in between high and low. You will expect this is gonna close in between these two line on Friday. We called it TGIF. Thanks God it's Friday. If the TGIF is done on Friday, on Monday, you will expect some kind of expansion. Either you have the news or you don't have the news. I don't care. But if the TGIF is done by Friday, then on Monday, you will look for the expansion. If the TGIF is not done, that means this candle is not going to close in between these two lines. Either it will close below this low or above this high, okay, or above this line. Okay, if it close above this line on Friday, then on Monday, first you will wait for the TGIF to be done, and then you will look for the rest of the things. However, this is a good example of the TGIF day week. So you can see this market open here, went higher, the manipulation expansion exactly came until 0.3 or 30% of this whole weekly range, and then closed over here. This TGIF has been done over here so beautifully. This is the first logic. So when this market is falling after trading some specific logical area, you will start to think that this market will go higher until the 20% or 30% area. I'm coming to daily chart. This is the daily chart. This is the new week opening gap. Actually, not a new week opening gap. It's an old week opening gap from Monday 13th of October 2025. So yesterday I was expecting, if you have watched my previous video where I actually broke down this candle, how to go for the trade over here. However, if you have watched that candle, when we have seen it has closed below this old week opening gap, I would love to see this is gonna be work as a resistance now. And from the daily chart, you can see that this market went until here, then fall. That means it is still respecting the 50% of this new week opening gap. It's a good sign because from the weekly chart, my intention to see it will go for that liquidity and then this liquidity, and finally there is the bullish parabolic from the weekly chart. I'm more interested to see this market will go for them. So when this candle has closed and this candle started to react from the 50%, I'm very happy to see this type of scenario from the daily chart. However, how long it went higher, we also break it down. But for now, you have to think that this candle yesterday closed today's candle can maximum go until here. That means the body is not going to close above the constant encroachment of this new week opening gap. Exactly, this should be your idea for the new week opening gap, to use it as a resistance. How long it has fallen, why it come until here, this all is going to be clear when I will go step by step. But for now, all of this price action I'm not going over here because it has been explained yesterday. So today I will only focus on today's price action. This should be clear by the explanation or by the PDRA explanation. So let's see what happened on 4-hour chart now. Okay, so from the daily chart, just a second, I think it's loading. Yeah, here. So you can see yesterday market perfectly rejected to that old weak opening gap upper quadrant. Here traded the upper quadrant, bodies respected so beautifully the constant encroachment here from that new week opening gap. The same thing you have seen on daily chart, that the constant encroachment of this new week opening gap is respecting, the market is respecting that line, and it is so beautiful. Okay, same thing happened over here. You can see the bodies respected over here from the 4-hour chart so beautifully. Week went a bit higher until the upper quadrant level, then market has fallen so dramatically and closed yesterday below this new week old week opening gap. This day market opened, fall, went higher. This is that bearish gap from the 4-hour chart, and this is the quadrant level. I have just marked the quadrant level, traded the lower quadrant of this gap, and then rejected from there, closed below this new week opening gap. It's a very good sign. This is all will be broken, but for now just look how it has been worked and closed by today from the 4-hour chart. I'm coming to 15-minute chart, where is the most of the explanation is going to happen. Okay, so here from the 15-minute chart, market perfectly respected the upper quadrant of the new week opening gap. Body has been respected over there, fall dramatically. Yesterday I showed that discounted week, how beautifully it has been rejected from the upper quadrant of that discounted week, and then so beautifully it has been fall and closed over there yesterday. Today what happened, market first consolidation, a lot of consolidation, then manipulation happened, came to the 15-minute last fair value gap. This is the 15-minute last fair value gap. If you go on your back left, and you will be able to see there is the 50-minute last fair value gap. Now this chart is a bit messy because of the contract changed. You can go back to NQ1 to check this if it is correct or not. Okay, so this is the 50-minute last fair value gap where market perfectly came over there, so beautifully came, and I have divided this last fair value gap by the quadrant level. You will be able to see that lower quadrant respected so beautifully it has been respected the lower quadrant. Then this market come back again, tap to the upper quadrant of this last fair value gap, and then fall one more time to the top of this last fair value gap, rejected from there. This is so much precise, and really I love to see this type of precision if I'm interested to look for the buy. At the same time, I would love to explain all of these things when I will show you the execution of or the setups. It has cleared the buy side liquidity, come back again one more time, traded the upper quadrant of this last fair value gap, and then tap to the top of this 15-minute last fair value gap, perfectly go higher, fall again, then rejected, came back again to this discounted weak upper quadrant, rejected from there, come back again, closed inside this last fair value gap to that specific leg. When it come here, this is for actually Monday, you see this high and that high, they are the relatively equal highs. It's gonna be very important for me on Monday, not for today, but I'm just showing this to you prematurely. So if you are watching this video today or maybe tomorrow or the day after tomorrow, whatever it is, before 5th of November, remember this buy side liquidity should be your highest priority to this buy side liquidity. However, when this market fall, it also left something over here. I would love to go back again the weekly chart, sorry, to the weekly chart. From the weekly chart, you will be able to see that this is a no wick candle. That means it has a very small wick, but I'm not convinced by that. Okay, the wick is very small. So this candle has actually made the manipulation for that wick. But if you look on your left, this candle also doesn't have any wick. it has a very small wick, but I don't care about that. I need some wick that is so beautiful and clear to see, something like this type of wick, that type of wick, or this type of wick. Okay, but not this type of scenario where the wick is very small, very small, very small. It's, I called them the no wick candle. Even though this candle has taken this low, or the no wick candle made the manipulation for this candle, but it failed to make the manipulation for that candle. That means it is still an unfinished business. I'm happy to see this because as my bias is bearish from the weekly chart and market is going to take those sell side liquidity in the later run, and it failed to make the manipulation for that week, so it's an unfinished business. So first maybe market will go higher to clear that 15-minute buy side liquidity. From the 15 minutes, 15-minute time frame, I showed you this buy side liquidity. Maybe it will take that buy side liquidity to fill the weekly PO3, okay, something like that, and then manipulation. Maybe this will be taken by the next week, maybe this will be taken by the next week, or maybe it will come here. I don't know how long it is going to fall, but it will fall and then again the reset, something like that. This is how the next week I'm going to predict is going to happen. So here, remember, if you go to your lower time frame as well, you will be able to see there is a sell side liquidity. That means the relatively equal lows. Even though it has traded the 50-minute last fair value gap, also it has built some kind of sell side liquidity. So if you see this swing low over here, that swing low, and when I'm coming here, that swing low is the relatively equal lows now. So it has built a new sell side liquidity. Today it doesn't need to clear that because it has to finish the TGIF, that is the weekly PO3 reset. It doesn't need to fall. Instead of that, it left that sell side liquidity for the next week. Instead of that, it was more interested to finish the TGIF 20% or 30% run. That's why it go higher, as well as it has built or engineered the buy side liquidity for the next week PO3 first manipulation. So next week, first market will go for that buy side liquidity, then it will start to look for that sell side liquidity. This is how this market is going to work. Now come to this price action to break it down, how it has been worked so far. Okay, so we'll actually break this down. I'm going to use the replay mode because it is important so that you can see the beauty of the price action over here. And I'm going to show you this new day opening gap. So this was today's new day opening gap over here. Remember, no sell is valid while this market is just above the new week opening gap. No buy is valid while the market is just below the new day opening gap. No buy is valid while the market is just below the new day or new week opening gap. However, from the 15-minute chart, you are seeing the 15-minute chart over here, so I'll keep the 1-minute chart around this area, and we'll talk about the 9:30 first. No trade is valid before 9:30, so we are waiting for the price action to happen until 9:30. Whatever is going to happen, I don't care. So until 9:30, around 9:30, this is 9:29 candle. So around 29 candle, I would love to see how this market is going to work around 9:30. Okay, here you can see these highs are the relatively equal highs. They have been traded this new week opening gap lower quadrant. This is the lower quadrant of the new week opening gap. So it has traded that lower quadrant of that new week opening gap, respected so beautifully from the 15-minute chart. You can clearly see that how beautifully it has been respected that lower quadrant, and then it sent the market lower around 9:30. What should be my first expectation? My first expectation should be, where is the liquidity? Now I can see there is beautiful buy side liquidity, this high, that high, that high, then this high has been that high, all of this high. So I'm going to mark the highest high as my buy side liquidity because all of them are relatively equal highs. You can mark another line over here, another line around there, wherever you'd love to look at, just mark them. So around 9:30, if this market give me some kind of bullish setup, I'll go for that buy. Don't forget about this. I have actually outlined them in live to today's live streaming. You can see around 9:30 market first went higher, came here, build another buy side liquidity. Look, this high and that high, relatively equal highs. If it cleared that high, that means I don't have any opportunity to go for the trade. This candle come until here, rejected from the lower quadrant of the new week opening gap, perfectly rejected from there, and built a relatively equal highs. Market is just a bit consolidating over here, still there is no opportunity. Then this market fall come here around that area, build another liquidity, this low and that low, they're the relatively equal lows. I'm just going to mark another line over here. You'll be able to see it's called the obvious liquidity or the sell side liquidity. So it has built another sell side liquidity. I have that buy side liquidity. Let's see how this market worked, and then a bit consolidation, okay. So finally it has came here around that area. After clearing this sell side liquidity, it come over here. Still, do I have anything to do? Nothing to do. We are waiting to see some kind of opportunity to go for the trade around this area. The reason is I'm not interested to go for any kind of trade until there is something so beautiful. It is simply consolidating. Even though it has cleared that obvious liquidity over here around this area, it has built another sell side liquidity. This low and that low, they are the relatively equal lows. So I'm seeing this has been built another relatively equal lows. This is the midnight open building the market, and clearly this market is a consolidation market. That means it is just consolidating here. It's not moving anywhere. It's just simply consolidating. So let's wait a bit more how it is going to work. Then fall one more time, fall here, then let's see, and then it has perfectly cleared all of this sell side liquidity. At the same time, this candle over here, you are seeing this candle is actually from the from the 15-minute chart. Look at this, and from the 15-minute chart here, this is that area that has traded the new day opening gap. After clearing this sell side liquidity, it has traded perfectly the new day opening gap. I have now my higher time frame. Any kind of buying opportunity right now, I will go for that buy, because this new day opening gap is holding the market. I'm good to go to take any kind of buy. Market went higher, built the the down close body close candle as an order block. These two candle is my consecutive order block over here. Okay, so here this is the consecutive order block. I would love to mark it until the body, just because it is highly volatile, and at the same time I would love to mark the mean threshold of that consecutive order block over here. Okay, so this is the 50% of this consecutive order block is the mean threshold. I'm going to mark that the mean threshold. So what you are seeing over here, that market is rejecting at first from the new week opening gap lower quadrant by building the buy side liquidity. It has built the sell side liquidity as well. That sell side liquidity has been cleared. Used this new day opening gap over here as a support. My interest to see, can it go for that buy side liquidity at first, so that this order block hold the market and send it higher. I would love to go for a buy over here. This is the first buy I have framed through the live streaming today. But I told that please don't go for that trade. The reason is you have to put your stop loss around there, sorry, around here, which is kind of 51 handle. This is not a good idea to go for this trade. So you don't need to take this trade. Just let it go. It will trade this order block and it will take that buy side liquidity. Let it go. I will show you another entry opportunity. No worries about that. But please don't go for that trade. Okay. Let's see how this happened. First, I have built what I'm more interested to look for. I'm more interested to look for buy. No buy is valid below the new week opening gap. So this is the new week opening gap. If this order block open was below the new week opening gap low, I wouldn't frame this buy. Remember that, as the order block is inside the new week opening gap, so I can use the new week opening gap low as a support. It is not going to work as a resistance. Then this market fall and gave me the entry from this order block opening. It can maximum trade until the mean threshold, but at the same time, as the stop loss was huge, like 51 handle, I really don't want to take that trade. Instead of that, I showed another entry opportunity. I'll show that immediately to you, don't worry. So after that, this market actually trade this order block so beautifully, went spent a bit time, then it has closed above this last fair value gap. So until now, this last fair value gap was holding the market. This is the last fair value gap over here. This is that last fair value gap below this buy side liquidity. So strongest fair value gap. When this candle has closed above this last fair value gap to that specific leg, I told that this is now the greatest opportunity to go for the buy from the top of this last fair value gap. Put the stop loss below that candle which has built this last fair value gap as a valid inverse parabolic gap, just two handle below this gap, target this buy side liquidity over here. If it take you with her, take that buy, but not this one because it was highly volatile. I didn't know that it will trade the mean threshold or not, or the wick will did the damage or not. If I'm wrong over here, I will get 51 handle loss. I didn't want to take that loss over here, so I told wait until this gap is broken and then tap to this gap, try to take that buy. You can see the next candle has given you the entry over here, and then boom. So sorry, I just need to show that setup as well, so I can't just do that over here. I would love to remove it over here until here. Okay, so this first buy from the order block, I showed, I marked them, but I told that I am not interested to go for this trade because the stop loss is gonna be huge for me. I don't want to go for that, but if you, any of you would love to go for one micro contract, you can try this one. I'm really not interested to go for that trade. But then when this appeared on the chart, I was so much confident that it is going to work as a support. Nobody is going to close below the consequent crossment of this last parabolic gap, and market will take that buy side liquidity. Okay, that buy side liquidity is going to be cleared so beautifully, that's for sure. That was my expectation, that was the setup. Stop loss was like 39 handle because it was a bit volatility. I had no other choice, so I have to put the stop loss over here, and the target was for 69 handle or 70 handle, something like that. It was a very nice trade at the beginning. My chat was full of boom, trust me. If you are not trusting, those people who are with me, they will just tell to the comment box, don't worry about that. However, when this buy side liquidity has been cleared, now my intention to see that can it come for this last parabolic gap, because it was a random reversal from here, from the 1 minute chart. It was absolutely a random reversal. I'm not interested to see this type of random reversal. I'm more interested to see it will come at least until this last parabolic gap over here, around there. Immediately when the candle closed below this gap, I told that used it as a reclaimed gap. It's a very strong gap, so you can use it as a reclaimed gap. Buy is done. The upper lower quadrant of the new week opening gap is going to hold the market, and so far this is still a random level. I'm not expecting this is gonna be reversed from this new week open, so new day opening gap. It should fall a bit more. So the next candle, when it has closed below this reclaimed gap, I told that it's a time to look for a sell from that gap. Same thing here. From there the sell is going to be here. You have to cover that order block open. Now it was again kind of a bit more stop loss. You can see here 3800 or something like that, and the target was this mean threshold of the order block previously I have used to take the buy. That 50% of this order block was the target over here, around this area, at least the partial, and then you can hold your trade until this parallel gap. There is nothing wrong, but at least until here you have to take the partial over here. So let's see what happened. In this type of scenario, body can closed above this gap. There is nothing wrong because it can reach until this area. I have already explained a lot of time about this reclaimed gap, so I'm not going inside that explanation of the reclaimed gap because I have to talk about the PM session as well. So I'm just showing you the entry around this area. So then the next candle actually opened and gave you the entry over here. The next candle has given you the entry, and then I hope it has actually worked a bit and then gave you the partial, or maybe you hold the trade until this last parabolic gap, you got the profit over here, okay, around this area. So if after taking the partial, if you hold it until here, you got the partial over there. Of course, we have framed a lot other setup around the morning session, but I'm not going to explain all of them because now I would love to move to the PM session by showing you all the price action. However, until now, I hope I have broken the price action over here so beautifully. And if you have still some question, don't forget to let me know to the comment box. Okay, so I will try to explain them to the next live session. So it will be easier for you to understand. However, I have also marked that setup as well here. That was a setup which was really so beautiful setup through the live. It was worked so beautifully later because I closed the stream around here. Later I come back again and see that it has worked like 81 handle over there. We also framed this by around here for 100 handle. Then a lot other things, however. So finally, I would love to go back again from the 15-minute chart from to the 15-minute chart. Okay? So we'll talk about the PM session now. So from 11:30 to 12:50, this is the time of the lunch hour. From 11:30 to 12:50, we are not allowed to take any kind of entries. You can see finally this market come back again to this 15-minute last parabolic gap upper quadrant, then tap to the top of this 15-minute last parabolic gap around 11. Then market went higher. That was the obvious liquidity around here. Market has cleared that obvious liquidity. Came here, fall again, trade this premium fair value gap, discount from here to here. This is the premium fair value gap, this is the discounted fair value gap. If you are expecting this market will keep going higher, you should expect that it is going to work with the premium gap. Maximum it can fall until the equilibrium, but it has worked so beautifully from the premium gap and then started to go higher again over here to the yeah, this week lower quarter, I mean that week 50% that area. However, for when I'm going to back to the 1 minute chart, you will be able to see these lines. They are the new week opening gap quadrant level, and this line is from the 15-minute chart, the quadrant level. Just keep that in your mind. I'm in 1 minute chart right now, and around 12:50 I would love to look for the setup. Until 12:50 I'm not interested to look for any kind of setup. So from 12:50 I will start to look for any kind of opportunity. First of all, this is the 50% of that, what to say, I mean the new week opening gap, 50%. So when this market came back again to the 50% of this new week opening gap, I'm not interested to look for any kind of buying opportunity over there. No buy is valid to me. Why? Because I am expecting this market is going to respect the 50% from the daily chart, the 50%, even the week is not going higher. So it will come here and then it will respect the market, will respect that, and it will keep falling, keep falling. If I have some kind of sell side liquidity, I'll go for that. First of all, I would love to draw your attention over here. This is that relatively equal lows, which was my beautiful sell side liquidity around this area. Okay, around the morning session, this was the gap or all of these things. I'm not going through them because we have already broke all of these things, how it is going higher. But right now, I'm just draw your attention, but not going to mark any line over there. That is the sell side liquidity. First, when this market came to the 50% of this 50% of the new week opening gap here, all of the buy sell liquidity has been cleared, traded the 50% of this new week opening gap. I'm now interested to look for selling opportunity. Any kind of selling opportunity is now my greatest or highest opportunity to take the sell. I'm waiting to see where is the 1250. So until 1250 I'm not going to take any kind of sell until 1250. Okay, so it is gonna be until here. So before that line, no sell is valid. At the same time, before that line, if this market keep going higher, maybe I'll change my decision from the 15-minute chart. If I see this market actually went above that gap, or like keep going higher, so something like it is bullish, it doesn't want to go higher, something like that, I will switch my decision and I will go for the buy instead of taking sell. So I'm waiting, and the next candle is going to be the 1250 candle. Okay, at the same time you can see this high has been cleared over here. 15-minute last fair value gap, going to show the 15-minute last fair value gap over here, not the last fair value gap I'm going to show. Instead of that, I'm going to mark the quadrant level of this gap from the 50-minute chart last fair value gap. So first logic is it has traded the 50% of the new week opening gap. I'm more interested to look for fall now. Secondly, it has cleared all the highs, left the lows here. See the sell side liquidity over here, this relatively equal lows, this relatively equal lows, and old relatively equal lows. I'm more interested to look for sell now to clear this type of sell side liquidity. 15-minute last fair value gap quadrant level, this is the bold line, is the 15-minute last fair value gap quadrant level, has been traded over here. Everything is telling me to look for a sell. I'm in 1 minute chart waiting to see if 1250 candle can build a selling opportunity. No trade is valid before 1250 or this line. Okay, so here you can see market still there is no selling opportunity. I'm just seeing the 50% of the 15-minute last fair value gap is holding the market. At the same time, the 50% of the new week opening gap is holding the market. That means it is working as a support, it is working as a resistance. I don't know where the market will go. Is it keep going higher or is it going to fall? My intention to see it will keep falling. So you can see here it's still holding and holding and holding, and finally this market fall dramatically. This has broken the 50% of the new week opening gap. It was working as support here. See here, it was working as a support. Now it has been broken. Market is inside the PM session. I'm ready to go look for the sell. Why? Because I have the sell side liquidity. I was interested to see the daily candle will come until this 50%, which is the new week opening gap 50%. I have seen this market has cleared all the buy side liquidity, traded the 15-minute last fair value gap 50%. Finally, around 12:50, it has provided me one of the beautiful or the most beautiful market structure shift or 22 YT model market structure shift after clearing these buy side liquidity here, clean highs. You can see here this high and that high. They are the clean highs, okay, over here. So beautiful buy side liquidity has been cleared over here. Market has provided me the market structure shift. If this market starts to fall by trading the gap, I'm more interested to take that sell. First of all, my interest to see if there is any sell side liquidity, which I can see here. This low has cleared over here by that. Sorry, this low has cleared over here by that low, which is a shallow run. This is my sell side liquidity, new sell side liquidity over here. I have this sell side liquidity over there. Love to mark it as a sell side liquidity. And to that specific leg, this is the last fair value gap. What is the last fair value gap? Last fair value gap here. This is the only gap, which is the last fair value gap actually. There is no other gap because this gap still is unfilled by the body. It filled by the wick, I don't care, but this gap is still unfilled by the body. So until this area, I would love to look for the sell. At the same time, this is the low of that new wick opening gap. If it can fall until here, that is a good area to as a target. My entry should be from here, as I have this fair value gap over here from this candle to until this volume imbalance. This is the entry gap. If within 5 candle I got the entry, I'll take the entry. If it make another entry gap here, I have to switch my entry from this area to the below gap. Okay, stop loss is the best area to put. The stop loss is above the high, which has cleared the liquidity. As you can see, it's 60 handle. Not interested to put it until here, so I'll put it above that candle which has built this fair value gap, which is 35 5 handle. This is the lowest I can put my stop loss, or I can put it over here as well, which is the lower quadrant, going to support the lower quadrant of the 15-minute last fair value gap. A bit risky to me, so I'll put it over there. This is safe. We'll try to take the partial over here, and for now I'll just keep it over here, but you can target this sell side, this gap over here after clearing the partial some logical level. So let's see how this market works. So the next candle has provided you the entry here, the PM session. First entry opportunity or the 22 IT model is going to be created over here. This is the entry because this is very immediate reaction. And then let's see how it worked. Okay, went until here, failed to go above that high. I'm very happy to see that I didn't get stopped out over here. If I would get stopped out over there, what I would do after getting stopped out, the very next candle, why I am going to get stopped out? Because my stop loss should be here. I can't put it here, so I have put it above that candle, to handle above this candle. If I get stopped out over here until this high is not taken, the next body will close below this gap. I will take re-entry by putting the stop loss again over the same area. Fortunately, I didn't get stopped out over here, so I'm very happy that I didn't get stopped out. And then of course you can see here the up close, body close candles are the order block. So here I'm going to mark all of these candles as an order block. Then this market has validated the order block, retested the order block. Let's see if it can keep falling. And then took the sell side liquidity or the partial. You have already taken the partial, closed below the lower quadrant of the new week opening gap. Next candle open, trade the low of this new week opening gap as a resistance. And then if it can fall, I think it has missed for a tick. Okay, I think it has missed a tick. Okay, so that could be the target, the last fair value of this area, but it can miss the target maybe for a tick or maybe for a handle or something like that. However, this is good run, 153 handle. Maybe you will get stopped out after trailing the stop loss here somewhere after 100 handle, but still that is one of the best setup around the PM session. This setup is the most valuable setup. You should be master of this 22 YT model, because this one model can make you the most profitable trader ever. Just this setup. You don't need to worry about any other setup. If I had the time, if it was not going to be too long video, I could show you here at least another 5 entry opportunity, the same thing I showed you here around the morning session, around this area. Okay, the way I showed you the entries over there, I can show you at least another 5 entry opportunity over there with the logic. And you have seen that through my live streaming. In live, I keep going for those type of trades, but as it is going to be a long video, so I'm not going to break all of those entry opportunities over here. Instead of that, I would love to show you the scenario, what happened exactly over here. So from 15-minute chart, as this market came here, rejected from this premium fair value gap, closed above the concurrent crossment, still I'm not interested to see any kind of buy. Why? Because this is that 15-minute last fair value gap. It can hold the market, send it lower again. I'm now going to mark the 15-minute last fair value gap as well over there. Okay, so here I know that there is gonna be lot of lines, but please don't get confused. This box and these bold lines, they are important, as well as the upper quadrant and the 50% of this new week opening gap is also important, but I'll talk about that later. Right now, when this candle came here, I can't think about buy right now. I should keep thinking about sell. Why? Because this is the last fair value gap from the 15-minute chart. I can't simply think about a buy right now. I have to wait to see if this candle can close above this gap. So let's say from the 15-minute chart, this is that candle. Okay, it has closed above this 15-minute gap. Now, what should I think? If this market really would love to go higher, take that line. It should not close below the concurrent crossman. That means this bold line, it should not close below this concurrent crossman. Instead of that, it should keep going higher and take this high over here. It should take that high. Now I'm interested to look for a buying opportunity, as the 50% of this new week opening gap has been broken. The upper quadrant level of the new week opening gap is broken. Market came until the 50% of this quadrant level from the week, here discounted week, came so precisely but closed above this 15-minute gap. If it can provide me another opportunity, I would love to go for that buy for this line. It came to the deep premium area now. I should keep looking for a buying opportunity. I'll be in 1-minute chart, and from 1-minute chart you can see it has just rejected from there, come here. I know that it can't go below this area. Any kind of buying opportunity from here is my perfect buying opportunity. It is also respecting the upper quadrant level of the new week opening gap. From the 15-minute chart, around here you will open this 15-minute chart. Okay, so exactly over here, you are looking exactly over here. Okay, around this area you are looking over here. Look how it is going to work around that area. First, this market fall here around there, traded this gap, big gap. You can also mark the quadrant levels. You should not expect that market is not going to close below the concurrent crossment. Why? Because it should not close this 15-minute last fair value gap concurrent crossment. In the same time, it should not close these gaps 15-minute, sorry, 1-minute gaps 50% below the 50%. I'm not going to mark those lines as well, because you will get, then you will be lost in this market. You'll get lost over here. However, let's see if it can provide another opportunity over here. It's still consolidating. I have nothing to do. Okay, it's consolidating. I have nothing to do. Nothing to do. Still, I have nothing to do. Come here, break this line, and if this high is taken, means I just missed the opportunity. Nobody has closed above that line. Simply nobody has closed above that line. Still, I have the opportunity if this market provide me another opportunity. Now, what kind of opportunity I could take from here? If I had the last fair value gap over here, I could invert it to take the buy. At the morning session, I showed you that, right? Remember here, this is that last gap here. That was the last gap that has been reversed here. I showed you the sell from there. But unfortunately, this market didn't have any kind of last gap or the bearish gap or something like that. Sorry, the bearish gap I don't have over there. So I can't use the reclaimed gap to take the sell, as well as I don't have the bullish gap here that I can use as a reclaimed bullish gap to take the buy. Unfortunately, okay. And then finally, this market came here to the upper quadrant, the last line of that 15-minute discounted week, the last line. It can take that high, which is the previous high. If you take it, good. If it doesn't take it, also good. I am now in no man's land. That means no buy is valid, no sell is valid. At the same time, the time you have to look for the time as well, like 2:22. First entry opportunity was here, and then all of this run from here to until here, I have nothing to do. I will keep waiting to find out another opportunity until the 15-minute candle is not going to close below this concurrent crossment. Any kind of buying opportunity is my buy for new buy side liquidity which has been created over there. So let's see what this market has done. Then this market started to fall over there. I have nothing to do. No sell is valid because market can start to go ahead to take that buy side liquidity. This time, when this market failed to take that buy side liquidity, respecting so beautifully the upper quadrant of this, this line, and then finally it has provided me a beautiful market structure shift here around this area. I can expect that it is coming to the 50% of this 15-minute gap, and then at the same time some kind of manipulation is going to happen. Then it can go back again for that buy side liquidity over here. So while I have found this beautiful market structure shift where the new week opening gap high failed to work as a support, instead of that, now I am expecting this is going to work as a resistance. If it works after seeing this beautiful 22 YT model, another market structure shift, you have this fair value gap over here. I'm just not going to mark the everything, but showing you this area. Okay, highly risky sell, but still it's an opportunity. Stop loss above that candle, just above that candle which has built this fair value gap. If there is another fair value gap below this fair value gap, you have to switch your entry from that gap to the next gap. Okay, if you get stopped out over here, for the next time it will close below this gap, you will take re-entry. Target is this low. More importantly, until the 50% of this gap, you are expecting nobody is going to close below the 50% of this last gap. If body close below this 50% of this last fair value gap from 15-minute chart, no more buy is valid, at least not for now. So let's see what happened. Then market actually gave you the entry by that specific candle. You got the entry. You will try to take the partial here somewhere around 1:1, and then you will hold your trade until, I don't know it will give you or not, and I think, yeah, there you will get your partial over here. Remember, this entry is highly risky entry, but still you can try that entry if you like, because this is what it is. It is the game of the probability depending on the quadrant level and depending on the situation of the market. Sometimes you will be able to catch some small portion of the kind of logic, sorry, stop loss to hold the trade for so long. However, there is also the premium and discount logic as well. It should work with the discounted gap. It should not go to the premium area because it failed to go to the deep premium area. It should work with the discounted area to keep falling. All of this logic is different. I'm not going for all of this logic, but I hope so far this make you a sense how this market actually worked, and then you can perfectly see that how beautifully these quadrant levels are rejecting the market, and it is respecting those quadrant levels. Just look at these quadrant levels, how it is working with the quadrant levels when it is working as a resistance. First it worked as a support. When it has broken, it started to work as a resistance, and then finally break the 15-minute last fair value gap again. This last fair value gap is not important anymore, and this quadrant level you can just simply remove them as well, because the last parallel gap is not important. Instead of that, you will just keep the quadrant level from the new week opening gap. You will look for this type of precision from the new week opening gap, and then you will see this market actually, this is the 4 p.m. market has closed over here. However, this could be the true setup around this PM session. In my opinion, this is high probable sell, this is high probable sell, a low probable sell. But this whole run I have to sacrifice. I can't just enter to this buy run, okay, or this run or this leg. I should not enter into this leg. Of course you can argue with me, brother, there is 22 YT model, something so beautiful. If you feel good, go for that trade, but to me, to take this buy is absolutely illogical. No logic I can see over here to take the buy. I prefer that sell, though it is highly risky, but still this sell is safer than this buy, because most of the time what will happen, the 50% from the new week opening gap will hold the market, send it lower again, or the 15-minute last fair value gap will hold the market and send it to the lower. When this candle appeared on the chart, which has closed above the 15-minute last parallel gap, then I will start to look for a buying opportunity. Unfortunately, market didn't provide me any kind of buy over there. Instead of that, it has provided the selling opportunity, and depending on that TGIF, remember 20% and 30%, you can fix your target. More importantly, until 20% or the 30% level of that weekly candle, you can hold your trade until those areas. However, guys, this was the breakdown for today's market. I just try to make it as smaller as possible, as shorter as possible. I hope it will help you to understand a bit about the price action. I know a lot of information over here. Try to watch it slowly. No need to finish it by one time, or like by making it faster. Try to watch it to learn the price action, to learn the logic behind the entry, because in this market there is always bull setup, bearish setup. Which one you should pick up, and which one is actually logical setup? If you can defer that, man, you are already ahead of 99% of the people. Just if you can defer which one you should go for. I wish this is gonna help you a lot to understand this price action. If it is, then don't forget to push the like button. Don't forget to write down boom to the comment box. And please don't forget to subscribe to our channel if you are new. Until the next video, cheers guys.